Okay, folks, so I hope you had a great 3-day weekend and enjoyed some rest because you're going to need it. We have a lot of violence coming this week. And in this video, we are going to be getting you ready for 3 different things. Number 1, a big play. Number 2, 2 squeeze stocks that are heating up. And number 3, what events and catalysts are coming this week, including Ooga Booga AMC. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and don't forget to subscribe either. Okay, let's go ahead and start with Mara, lovely Mara. So at this point, our lovely crypto miner Mara has more than doubled since June lows. Mara is a dirty tease, and there's been so many periods of time where she's been cut in half and then doubled or tripled and then cut in half again. This is what we call an ideal conviction play. First time we talked about Mara was on January 3rd, 2021, and it was selling off at that time from 15.5, and when it hit 10.46, I was like, hey, this is a pretty damn good deal based on my conviction in the Bitcoin niche and the institutional adoption that we were seeing even at that time, and of course the value that a Bitcoin miner like Mara provides in that. Mara was aggressively scaling into Bitcoin mining during a period of time that I thought was going to be very strong for Bitcoin, and it has been a very strong year for the currency as a whole. Analysts said this was trash because they're spending way too much money investing in their business, and they should instead be trying to throw that money back out to the worthless shareholders that just want to make a few bucks. But anyways, it is true that their aggressive investment in themselves has made them a very contentious play during downtrends, but it's also sped up their uptrends during, well, uptrends. From that $10 price that we made the first video on, it went up to 50, then it got cut in half again, then once again doubled back to 57, then got cut in half again. And now it's in the process of making its latest attempt at a comeback, and it's done very well so far. And that's, of course, thanks to the overall upward trajectory of Mr. Bitcoin. Bitcoin itself has continued its attempt into the 50s this weekend, suggesting more opportunities for crypto miners this week. But one of the things that we love about Mara is that this is a very high conviction play that we believe in perhaps for years down the road. What does that mean? Well, it means that every single time it has a massive dip, we're like, hey, that's a massive win for us. And every single time it has a massive euphoria run, that's like, hey, that's a massive win for us. If something is truly high conviction in that you believe in it as much as you believe in gravity, then literally there's no such thing as a bad move. But you see, it's not just the conviction in a play that makes it good, but it's the speed at which it moves. Because you know, the faster it moves, the more the market is confused about its potential, which is great because we have conviction in it. There's certainly growth plays that don't come back as fast as Mara. I mean, look at Palantir. But the value is that keeping track of your highest conviction plays and then buying in during periods of dysphoria and riding the momentum to euphoria is one of the best ways to exploit the moves while also having a long-term outlook. But in terms of future predictions for Mara, my take is let it ride. I want this to break out into new highs. I would be extremely greedy with this one. Why sell a diamond for pennies, right? If this was trading and attempting to break out at all-time highs, I'd say fine, take some profits off the table. Who knows if there's going to be a massive Bitcoin crash tomorrow. But right now we're in the strongest attempt yet for a Bitcoin rally and a new Bitcoin breakout. And with Mara heating up over the last couple of weeks, I say let it ride. Okay, moving on to short squeeze candidates, let's talk about SPRT and what's going on with it. So SPRT was a previous successful play a couple weeks ago, and we are approaching what could be a round 2. Let me explain. While it is dying down in terms of search interest, while it's dying down in terms of stock price, what remains special about this play is its extremely high short interest. Now here's the thing, and let me just bust a myth really quickly. There's this idea that if you have a stock with extremely high short interest, that makes it more likely to be a squeeze play, which sounds reasonable, but you're leaving out a massive part of the equation. Whether or not there's enough buyers in the game in order to cause the shorts to backfire, because on their own, the shorts aren't going to backfire. In fact, what does short selling do? It creates massive selling pressure. So on its own, short selling actually makes something less likely to bounce. But what does induce the bounce is if enough buyers start buying up the available float and cause a ricochet effect for the massive hungry and greedy short sellers. And so far what we saw last week is it hasn't been able to get a new wave of buyers in order to fight off those short attacks. But if it does, ooh, and we are right now testing an inflection point with the holding of upward direction above our red directional SMA line. And if this can manage to maintain that upward direction, I would not want to be on the short side of this. Now, admittedly, on its own, I'd say, hey, look, short sellers are winning the game right now. If left to its own devices, I'd say, yeah, it's going to be difficult to get buyers back in this stock. However, you have to remember that we do have a catalyst coming on September 10th, which is this Friday. On Friday, the company will be voting to merge with Greenidge, a catalyst that has brought about pre-anticipatory runs many times in the past. And quite frankly, shorts have gotten greedy again. Estimated short interest rose dramatically during the rally from the turn of August towards the peak later in the month, but as it got higher, shorts started realizing they were in a corner. They started closing out and short interest dropped for several trading periods. But then what happened? Well, they got greedy again. They want more money. As it started tanking, I guess they didn't learn their lesson because what happened? Well, they said buyers are gone. Let's go ahead and accelerate and profit off this downtrend. What do? They increase short positions, and you can see that short interest has started picking up again during this downtrend. Some of them closed out short positions at higher prices because they realized, hey, retail is picking up on this. I don't want to get stuck in this damn position like the folks over at AMC and GME did. But when new slews of buyers picked up and went home, they said, wait a second, here's another opportunity. And as a result now, the short interest of this is so high. We're sitting at 72% or more according to Ortex estimates. Quite frankly, what that means is there's not a lot of margin for error if buying pressure comes in. There's very little shares left to short and borrow costs are going through the roof. Higher borrowing cost goes, the harder it is for them to break even. So my projections, well, right now, short sellers have the upper hand. Unfortunately, they've been too big on playing offense on this that they have a very, very bad defense. If you get inflows induced by either risk on trading in the entire market this week, or you get inflows based on retail or long institutional funds buying in anticipation of the merger vote on Friday, well, both of those things could put short sellers in a very bad position very, very quickly. In the first case scenario, I'd say, hey, if it's risk on trading that causes this to rally again, I would say that you'd expect that to happen from the low 20s. If it is pre-anticipatory running towards that catalyst that causes this to run, I would say 10, 15 bucks is probably more likely to be the momentum price. But who really knows? You could also get both happening at the same time. And we're just talking projections and averages here. The thing is that if we start seeing a lot of buying pressure in this at any point, really, when you have this high of short interest, that creates a very, very weird situation for short sellers. Okay, next, BBIG. So our BBIG play, after its original run, had about 2 market open sessions of cooling off before its second rally. After its second rally, it's now gotten another 2 market open days to cool off. You combine that with an open tomorrow or Wednesday that has more risk on trading if we get that. And it's likely that we see another rebound rally. But on Wednesday's video, what did we say? Well, we said, hey, this is a stock that has achieved its goals, broken out into new highs. Let it take a damn breath. And we'll see what it leaves us with afterwards. And what we've been left with is very intriguing. You see, what BBIG has going for it is something that SPRT actually needs, which is BBIG has a very, very strong search interest amongst retail traders and is being spread around at a very high rate right now. BBIG has led the search interest trend into the weekend, and SPRT has continued to die off despite having an earlier lead. The reason, well, probably because BBIG had more momentum last week, whereas SPRT had a strong down cycle. People tend to search for stocks and show more interest in stocks that have high momentum in the moment as compared to stocks that had high momentum in a previous week or so. And because traction tends to breed more traction, that also tends to relate to more buying pressure on a stock. And that's an advantage that BBIG holds going into this week, although the short interest is much lower than on SPRT. That being said, BBIG short interest is nothing to scoff at either. Ortex reports estimated short interest in yellow as a percentage of free float is nearing all-time highs. Cost to borrow is getting close to the levels we saw during the January gap up rally, but the fact of the matter is that this run that we've seen over the last couple of weeks in BBIG has been a lot healthier of an uptrend than we saw in January, where you got most of the run on just one short-term blip that then just died off. When it's much slower and consistent, that suggests that you have a bigger rally ahead of you. If you could turn up the heat slowly and have a consistent stair step, what does that really do? Well, it means that every single day there's an uptrend, short sellers get in a worse and worse situation. It costs more to borrow, they're sitting more on red, and they're getting closer and closer to margin calls. So what is my take moving forward? Well, I'm pleasantly surprised at how well BBIG has managed to hold retail interest this week. And how much of that buying capital that came into BBIG within the last week or so, how much of that actually stayed in the position over the weekend, which was a very, very risky bet. That suggests to me that there's more staying power in BBIG than I thought, and I would expect more rebound rallies. And I think if we can get a really strong risk on day before BBIG breaks below $5 or $6, that would be a very, very fun setup. Okay, moving on in terms of what to get ready for this week. Well, on Tuesday, we have an earnings release from one of our high conviction plays and one of ARK's frequent buys, UiPath. This will be taking place after close, and I'm hoping for some validation of our conviction in this play. Wednesday, we have GameStop reporting earnings, and you know what they say, can't stop, won't stop, GameStop. Okay, that was me pandering to the GME folks, but everybody knows that I'm more of a ooga booga AMC guy myself, but no disrespect either way, right? Obviously, AMC nor GME trade on the fundamentals, but earnings in one of the two major meme stocks tend to have a big impact on the rest of the meme trading. And the last two earnings for GME specifically either started a downtrend or accelerated one that was already present. Both of those downtrends stretched not just to GME, but they also stretched to AMC and pretty much all of the other meme stocks. And the reason is, in my view, is because earnings dates tend to be a very clear point of attack for short sellers. Point of perceived weakness, where the media has a very easy time pumping fear, saying meme traders hit with stark reality that this company is overvalued fundamentally. And I think that it becomes a bit of a self-fulfilling prophecy where a lot of the long holders that are kind of buying this as more of a momentum play, they sell off in anticipation of sell attacks, and sell attacks accelerate the sell-offs, which then creates a lot of risk-off trading in many of the other meme stocks. And sometimes even just the idea that that could happen again is something that's enough to cause it to happen again, hence the term self-fulfilling prophecy. That being said, it's worth mentioning that GME is trading once again right where it sold off to after its previous earnings drop, and it'll be interesting to see if it can hold off sell storms this time, because alternatively, if it can actually hold them off and go up for the first time in the last couple of earnings, that could be something that's very, very bullish for meme stocks. Okay, lastly, quick bonus, a homework play. So MMAT, we mentioned this one last week. I've been increasingly excited about it. MMAT has a strong history of meme style rallies following the usual trend. January meme rally increase where it more than doubled. May and June rally where it went from 4 to 23, which was drastic. And now recently heating up again after breaking our red directional SMA line. But you focus on it in the last few weeks. Basically, since hitting lows on the 18th, it's been consistently stair-stepping up, which isn't too much different from a lot of the other meme-style stocks that we've been following. But what's interesting about this play is it's relatively low short interest, huddling around 10% right now, which is the lowest amongst many of the major stocks that we've been talking about. And while that is still pretty high and nothing to scoff at, it is a lot lower than, say, SPRT or BBIG. So my homework for you is look into why MMAT is running. Look specifically for short interest trends, borrowing rates, and most importantly, upcoming catalysts. I think if you're up for it, this would be a fun, interactive social experiment to see what you come up with. Comment them below. And tomorrow we'll touch base and I'll give you my reasons why I think it's rallying. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course our daily morning briefings, where we brief on what's happening in the market each morning and all of our favorite catalysts, well, I'll go ahead and put a link to that below. FUDSTOPPER50 coupon code will get you $50 off before checkout. And lastly, if you're wondering what broker to trade these stocks on, well, if you're a buy and hold trader, multiple days to multiple months or years, well, I recommend public.com/ZipTrader. Sign up with our link below and you will get a free stock. If you are a day trader or swing trader, I also recommend Webull. And with Webull, you will get 2 free stocks if you sign up and deposit just $5 or more using our link below. Anyways, folks, that caps off the video and I'll see you in the next one.